very good morning, guys. The news first. Yesterday, the Nifty fell 516 points, down 2.12%. It closed at 23,882. 45 of the 50 stocks were in red. The 24,000 mark everyone was watching broke, and we have dropped all the way to 23,805. Now, the twist. On that red day, the big money did not sell. FIs and DIs together bought almost 2,753 crore of stock in the cash market. Price crashed, smart money added. That gap is today's whole story. This is the Tanmay Edge, episode 77. I'm Tanmay Gurdoti. Two big events play today, Sensex expiry and the TCS results. Let us go straight to the data. One honest line on yesterday's call, guys. I said range bound, buy the dip, wrong. Oil spiked and the market fell straight through it. The one thing I got right is IT held up, and that is what it keeps the TCS trade alive today. What the numbers say today is very important. Starting with the damage, Nifty was down 516 points, 2.12%. Sensex down 1677 points, 2.15%. Only 4 green stocks out of 50. Now the number that matters the most. The fear index, India VIX, jumped almost 25% in one day to 14.54. All week it had sat near 11. Now it is near 15. Simple meaning option prices went up and the daily swings get bigger from here. Why did we fall? One word, oil. Brent jumped almost 5% to $78 on Iran and Hormuz scare. When oil spikes, the world sells and India cannot sit it out. Korea fell 5%, Japan fell 2%. The rupee slid to 95.56. One quiet number that did not panic, the Indian 10-year bond yield stayed at 6.68%, barely moved. So this was not a banking or a debt problem. It was an oil and fear sell-off in the stocks. Keep that in mind. So this morning looks better. GIFT Nifty is up 99 points, 0.41%. That points to a gap up open near 23,975 on Nifty. And on the same math, the Sensex should open up about 250 to 300 points and near 76,800. Asia turned green. Japan up 2%, Korea is up 1.7% after crashing yesterday. US futures is also flat to slightly up overnight. So the panic has cooled up while we slept. One catch, oil is still climbing. Brent at 78.87 this morning and the rupee is still weak near 95.56. So we open higher, but the headwind is present, remember that. Now the options data. The options and the futures data is where you see what the big players actually did, not what the news said. The pros first. The sharpest desk, they are the net long about 10,201 future contracts, and they also bought put options as insurance. Careful, not scared completely. The FI funds are short about 2,68,586 index futures. That looks bearish, but they are also long 5,77,555 single stock futures. So that is more than 2 long bets in stocks for every one short on the index. So it is a hedge, not a bet on a crash. And the retail crowd is completely long, 1,87,155 futures long, and has sold 6,28,000 put options. The crowd is betting the market holds here. If the support at 23,800 breaks, those sold put starts losing. They rush to cover it, and that pushes the market down faster. So reading it simply, guys, the retail crowd is trapped. They are still short almost 6 lakh put contracts, which should get out and stopped out in the down move. The pros have made an insurance on the downside. The FIs are still short index and going long on the stock. So that is the tension going into today. And here is the clue for today, guys. Yesterday almost everything fell, but IT barely moved, down just 1.37%. Infosys down only 0.21%, nearly flat. Banks fell 2.5%. And IT reports today. TCS first quarter results this session. The market quietly kept it bet on IT while everything else sold off. Today we find out if that bet pays off or not. Now today's main event, Sensex weekly expiry. Let me give you the exact plan, not just a range. Where we open, Sensex closed at 76,503 and should open near 76,800 on global bounce. The level from the option chain, the biggest call selling sits at 77,000. That is your resistance today. Above it, it's at 77,300 and 77,500 is the next resistance. The biggest support is present at 76,500 and then below it at 76,000. The middle 76,500 is the magnet, the level the market wants to settle. That is, today's expiry is expected around 76,500. That is the expected move. The ATM straddle is priced around 780 points. That is the swing the option markets expect today on either side. Add it on the chain and you will get roughly 76,000 to 77,300 on the upside. So that's a huge range for today. Now the stance, and this is the key. On a normal expiry, you sell options and collect that premium because price sticks to the magnet. Not today. VIX has jumped massively yesterday. IVs are up. When fear is rising into an expiry, the magnet gets weak and the price can run away from it. So do not blindly sell options. Today's expiry is not going to be easy. Here is the trade, guys. If we open near 76,800 and push upwards to 77,000, that is the resistance. Sell into it. The call sellers will defend that line. If we fall towards that 76,200 or 76,000, that is the support. Cover your shorts and watch out for a bounce. The middle near 76,500 is just chop out region. Trade the edges, skip the middle part of the whole zone. 76,200 to 76,000 is your buy zone. 77,000 to 77,300 is your sell zone. Today, the market is going to swing between these levels. Quick on Nifty for the swing traders as well. The map flipped. 24,000 was support all week. Now it stands as the resistance. The biggest call wall sits there and 24,200 above it. Support is present at 23,800 and below that a fast gap towards 23,600 level. The options market is pricing about a 380 point swing this week, a range of almost 23,500 on the downside to 24,300 on the upside. Simple stance, 24,000 is the resistance, sell into it. So 24 to 24,200 is your selling, sell on rise. Buy on dips stands at 23,800 levels. So you hold 23,800 and we can push higher. Lose 23,800 and 23,600 is coming fast. So the plan for today, so here is how I am trading it. Light and patient because two events land at once. One Sensex expiry trades the edges. Sell near 77 to 77,300. Buy near 76,200. So that is skip the middle range. That is what I am looking for. To watch the crowd for the turn. If the retail starts buying back those 6,28,000 sold puts while the pros stay long, that is a green signal for a pushback towards 24,100 to 24,200 on Nifty. 3. The TCS is a wild card and oil is on a leash. A strong TCS result can pull the whole market up. A weak one brings the fear back, and oil near 79 caps how far we can bounce. So do not guess before the result. Let IT lead you. Have a great Thursday, guys, and a great expiry. One broken level, one quiet foreign bid, one sector that held into its own result. Trade the expiry edges. Respect 24,000 as a resistance and 77,000 as a resistance, and let TCS lead you. This was the Tanmay Edge. If you found value in this, guys, please share it with one trader friend who needs it right now. Subscribe to Apple Podcast, Spotify, and listen it live on rupeecase.com where it streams first. And give me a rating, guys, and a review if you want to add something to this podcast. See you all and have a happy expiry.